So in terms of Xero, I'm not sure if many of you know about Xero, the accounting software, but Xero is an accounting software, and the company behind it was founded back in 2006, and this company was based out of New Zealand. Its main product is the accounting software, and there are currently 2 million users worldwide, so it's not a small software by any means. It's got a very large market share in countries such as the UK, South Africa, Australia, New Zealand, and it's usually number 2 or number 3 in terms of market share in the other developed markets such as Europe and North America. Last year, its revenues hit 0.5 billion. So it's, like I said, again, by no way is it a small software company. In terms of the software, so the very theme of Xero when it first came about was to be a very user-friendly accounting software for entrepreneurs and accountants. And as an accounting firm, one of the reasons why we chose only Xero to support our clients was because it's very easy to use. It's very good at separating out the cash and the accrual-based transactions, which is very important when you're preparing cash flow forecasts, because you want to be able to distinguish the two types of transactions when you're preparing a cash flow forecast. So I'll now go into my screen and start showing you a few reports which could be quite relevant for you. One of the things that I just want to point out is today we're not going to go into a deep dive of Xero. We're just going to go through, touch upon a few points which would be useful when you're preparing a cash flow forecast. So we'll touch upon the cash flow forecast statement of cash flows report. We have a cash summary and a profit and loss. So the cash summary is very much like an IFRS cash flow statement. Xero does provide it in the indirect and the direct method, just in case you was wondering. In terms of features, Xero allows you to drill down into numbers from the report. So if you've got a number and you want to know what it is, you can just drill down and see the transactions there and then. So that's quite useful. And all reports in Xero, you are able to export into PDF, Excel, and Google Sheets. And that's quite important because if you're preparing a cash flow forecast using Excel, for example, you need to have a good starting point. And you may want to use Excel to help you with that. Now, I'll go more into the cash summary and the profit and loss now. So as you can see, the cash summary has got income, operating expenses, and then all the other sections such as non-operating amounts. But you can see that it looks very similar to a profit and loss account. If we go to the profit and loss account, you can see that you've got the income, less operating expenses, and then the net profit. However, for the accountants who are with us, obviously the profit and loss is generated using an accruals based, whereas the cash summary is on a cash based. So what's the difference between the two? If I click into my profit and loss sales figure for March, you can see that these are all made up of invoices or credit notes. And that's what makes up my my sales for the month. If I go to my cash summary, you can see that these are all of the cash that has been collected for the invoices. So you've got PAY transactions and APP transactions. PAY transactions are payments which you've applied on invoices, and APP are applications of credit notes to invoices. So that's quite useful from that point of view as well. Now, if we then go to the bank account, so the other thing that's quite useful in terms of preparing your real-time cash flows is that what Xero does is it separates out manual journals and cash journals separately. So when you're running reports, you can clearly distinguish between the two. So in this situation, in this bank account, if I can create a spend money or receive money transaction. So if I was to create a spend money transaction for now as an example, I can type Alpha Pro Partners. I'm going to select March and I'm just going to put deposit. I'm then going to put my description as deposit. My quantity as 1, unit price, let's say 800, and I'm going to post this to the deposits account. So I'm going to save that. And then you can see on my account transactions that it's been entered already, but it's unreconciled. So this is quite important because if you do want to produce real-time reports, you need to be able to enter your transactions as and when they occur, so your reports are the most up-to-date reports. Now, how does this look in terms of the cash summary and the P&L? Well, if I go back to my cash summary, if I was to refresh this, I've got a amount here for deposits. And if I click into it, I can see that $800 transactions, which I've just entered. So that forms part of my cash summary. If I go to my profit and loss, obviously it's not going to be there because it's not a profit and loss item. It's a balance sheet item that would be covered by the cash summary. So that's another example where transactions are separated out. What you can do is you can then distinguish between the two when you're preparing your cash flow statement. Now, in terms of the final example, so we also have manual journals. So I prepared a manual journal earlier, and this is an intercompany journal. Now, journals, they're usually based on an accruals basis, and the journal type is called a JNL. Now, here you can see on the 31st of March, I have posted an intercompany expense between, say, advertising of $1,000 and prepayments. Now, if I go to my cash summary and I select advertising, I'm not going to see that transaction because all I have is PAY transactions. If I go back to my profit and loss and I select advertising, you can see that the MJ journal, which I've just posted earlier, is there. So here you can see where here you can see the distinguished between the manual journals and the PAY journals as well. Now, one more thing I just want to quickly highlight to you now is we just go back to the bank statement very quickly. In Xero, you have to upload all of your bank statements from your bank account to Xero before you reconcile. Now, what is the benefit of this? Well, one of the benefits is that Xero has a very good search function. So when you're preparing a cash flow forecast and you need to be able to search certain transactions, you can do that quite quickly. So if I was to search bank, for example, I can see straight away some of these bank transactions relating to bank. Now, these things you may not be able to data mine that well if you were to go into your internet banking, or you may not even have access to your internet banking. So that's why this is quite important. And then finally, you can also whatever you've uploaded into your bank as a bank statement, you can download it as well into an Excel spreadsheet. So if I go to bank reconciliation and I select bank statement, I can select here a date range of all of the bank transactions that have been uploaded to the bank. I can then export it into Excel, Google Sheets, or PDF, and then I can use that as the information I may use to prepare my cash flow forecast, or just to data mine to see what cash transactions have occurred previously to then help me forecast going forward. So just to recap, why is all this relevant? Well, to achieve real-time reporting, you need to be able to enter your transactions immediately into your accounting software. That then gives you a good starting point for your forecast when you're forecasting in future periods. And obviously Xero, as I've demonstrated, helps identify quite easily your cash transactions against your accruals transactions.